Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news reports of an impending large Chinese share market rescue that were enough to stop falls there yesterday. In the US, their weekly monitoring of bricks and mortar retail trade by the Redbook index shows stronger gains, up 5.2% last week from the same week a year ago, notably more than accounted for by inflation. That caps their best 4-week run since late 2022. In Japan, their central bank kept its key short-term interest rates unchanged at minus 0.1%, and that for their 10-year bond yields around 0% in its January meeting. This was as expected. In an effort to stabilise local equity markets as they head into the Chinese Lunar New Year holiday, which starts on February the 9th, Bloomberg is reporting that Beijing is trying to mobilise 2.3 trillion yuan's worth of funds for a home team buying spree there. Just the rumour brought a turnaround in Hong Kong, Shanghai and Shenzhen stock markets yesterday, but the big question will be whether it will be sustained and the attitudes of investors, or they just take the opportunity to lock in prices they wouldn't otherwise be offered. China has a history of these types of emergency responses, but few of them seem to work. During the 2015 rout, the home team spent 1.7 trillion yuan in a summer support drive, but stock prices fell anyway after the state buying wound down. In Australia, the NAB Business Confidence Index climbed in December from a downward revised result in the prior month. It was the third straight month of negative readings, but the softest figure in the sequence, supported by a pickup in the mining and retail sectors. And staying in Australia, it looks like the Stage 3 Morrison tax cuts for high earners that have been revised so that they shift to help those on middle and low incomes, including people earning less than $45,000 a year, a level ignored in the prior version. And the US Treasury 10-year yield starts today at 4.15% and up 5 basis points from this time yesterday. The price of gold will start today little changed, up a mere dollar at just on $2,024 an ounce. And oil prices are down 50 US cents, just over $74.50 a barrel in the US, while the international Brent price has not changed much to $79.50 a barrel. The Kiwi dollar starts today at 60.7 US cents and a quarter cent lower from this time yesterday and a 2-month low. Against the Aussie, we're softish at 92.5 Australian cents. Against the euro, we're holding at 56 euro cents. And that all means our trade weighted index starts today at just under 69.8 and down 15 basis points in a day. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.